Good afternoon. Today is Monday and it's February the 12th. The time right now is 12:13 in the afternoon. And today is going to be pretty quiet because we have no major economic news lined up. And we can see last Friday, we see US equity continue to edge higher, all except the Dow Jones Industrial Average. The high traded so far remains at 38,783.62, as you can see on the chart here. Obviously, this is the 4 hours time frame, and the market is, in my opinion, a little bit toppish for my liking. And I think the risk of a pullback is actually greater than normal. So I won't be surprised if the price do pull back in the first 48 hours of this week itself. So I'm a little bit bearish going into tonight's trading, into New York session. So this is my opinion. And we can see in the futures contract for the Dow Jones, this is the futures contract traded on the CME. We can see that beside a divergence that is so obvious, we also see the volume has been less than ideal. And this is also suggesting that prices upsides are quite limited. In the S&P 500, we see that the S&P 500 managed to trade above 5,000 points for the first time in its history, traded to a high of 5,030.06 on Friday itself, and very similar to the Dow Jones. Although the market has a new high, the market is not very well supported in the sense that the volumes and the indicators are suggesting that we probably will see a divergence going on. Now, this can be seen clearer in the S&P 500 Micro E-mini futures. We can see although the market traded to a high of 5,048.5, the volume has not followed through, and there's also a very obvious divergence going on here. Obviously, I'm not suggesting the price is going to tank almost immediately, but I'm just saying that the upside is going to be quite limited in the face of the volume not picking up in correspondence to the price increase. In the Nasdaq 100, yes, we do have a marginal height in the Nasdaq 100. This is just trading below the 18,000 marks. And again, the market here is not looking too bright to me, although the market remains very bullish. In the futures contract, we can see what we are apparently seeing in the other two major equity index is that the volume has not followed through, and the divergence is also very clearly marked out in the futures contract. So all three major equity index in the futures contract is looking a little bit toppish, and I won't be surprised, like I say, in the immediate future, we see a pullback. And obviously in Asia, we can see a lot of markets are still closed for trading. We have from Japan all the way to Singapore, a lot of Asian markets are observing the Lunar New Year. And for China, it's going to be a week-long celebration. We can see that most markets in Asia are still not open. In the Nikkei 225, the futures contract, we can see that last Friday, we see the market went up to a high of 37,280. And this is, again, a 34 years high, but the volume has at least caught up, unlike what we see in the US equity markets, although there is a very clear divergence, but the volume is at least supporting this move to the upside. But again, we will have to see if the Wall Street start to pull back, it will invariably also impact the Asian equity markets negatively. Hong Kong is the same thing. Hong Kong looks like it will probably go higher, although the market will be absent for one whole week. We can see that, or at least up to tomorrow. Tomorrow, Hong Kong market is closed, but Wednesday it will be open. The Chinese market will not be open. We can see that the market in the Hang Seng Index futures, we have lower volume, and the market do appear to be doing a three-wave bounce. And if this is the case, we'll probably see prices going above the 16,455 high that we saw last Tuesday or last Wednesday. And the immediate target is for the move towards 16,800 to possibly the 17,000 cluster, which is where the October, November, December close are all located, okay? And in the dollar itself, the dollar looks a little bit vulnerable. In my opinion, the high of 104.47 was traded last Monday. So since then, the market has been pulling back more or less in a sideways pattern, but more likely to see further losses going ahead. And if we do see downticks in the dollar index, the area between 103.50 to 103.65 looks like it'll be an area where it may actually hold. And if that is the case, I do see that there's a possibility of further advance beyond 104.47 high. Correspondingly, we can see that the euro dollars is vulnerable, although the market is edging higher, currently trading at 107.92, and this market may actually have very little upside. I'm looking at 108.10 to 108.25 levels later on in London to see if the market will be kept between these areas. If it's so, then I think the market may be poised to go lower for a break below 107. So do look out for the possibility of further losses in the principal currency, including the euro dollar. Now, sterling is also looking a little bit vulnerable, although the market is a lot firmer than what we saw in the euro dollars. A bounce from 125.18 may actually see a extension towards the 127 levels. So anywhere between the 127 to 127.25 levels looks to be a good area to position short for the next leg downward below 125.18. In the Aussie dollars, same thing. We are beginning to see three-wave patterns, and three-wave will see this bounce from 0.6469, maybe edge up to 0.6550 to 0.6570 levels. Look for to sell the Aussie dollars for a break below the 0.6469 low that we saw last week. Canadian dollars looks firm. Okay, the Canadian dollars looks like it may actually go higher in a three-wave bounce towards the 136 to 136.40 levels. So I'm actually quite bullish on the dollar versus Canadian. However, the same cannot be said for dollar yen. Dollar yen does look a little bit, yes, the market is basically quite firm, but technically speaking, I do not like this structure. The high at 149.57 does not look to be going to be challenged anytime soon. I think the market may actually pull back. If we do see a pullback anywhere between 146.35 to all the way to 145.60 levels looks like a good area to pick up some more long position. But for the current level at 149.25, I do not like to get into a position here. I'm just waiting for confirmation that the market may actually top up and looking to see a corrective pullback in the dollar yen. In gold itself, you can see gold is not going anywhere. Okay, there was a moment in time we can see the price actually surged to $2,065.53, and it has since lost back everything. And this suggests that any kind of bounce back into the $2,045 level may actually be a good level to actually position short for the next leg lower below $2,015 to maybe even take out the $2,000 levels over time. So I'm a little bit bearish on the gold market. However, I'm actually quite bullish on the silver. Silver structure looks very different from what we see in the gold market. Now, silver does look like it may actually do a bounce from a low of $21.91, perhaps targeting the $23.55 to $23.90 level. So this will be a great level to position short in my opinion, but for the time being, I am a little bit bullish on silver relative to gold. And in the commodities, we can see that energy prices has actually risen. $77.25 was a highlight traded on Friday, and we do see a minor pullback this morning. If the market can pull back a little bit deeper, ideally in below $75 to $74.86 to $73.70, that would be a better area to actually position long. Generally, I do like this structure here. I think there is a very good chance the market may actually do a rally beyond the $79.25 high that we saw since the end of January. Okay. And over in Bitcoin actually has a rally. This morning, it went up to test the $49,000 once more time. Remember, on January the 11th, on the first day of trading of the BTC ETF license, the Bitcoin prices went up to test the $79, failed, and pulled back to $38.500, $38,500. And we can see that this market now has recovered almost fully with a high at 48,820 in the morning. Now, this is followed by a very small reversal pattern here. If the prices continue to edge lower, there's a possibility that the top may be around here at 48,820. And I am a little bit bearish right now, basing on this structure here. The market failed to take out 49,000 anytime soon. The market may actually come back down, ideally to go back to test the $43 and 43,400 to 42,500 levels. Anywhere between these two levels will be great, but let's see what happens. This is all I have for you. Now remember, tomorrow we have CPI numbers. That should be something that we want to watch. It should provide some kind of fireworks. And in the meantime, you take care, and I'll come back to you tomorrow with further updates. Bye-bye.